Hello traders, Gary Wagner here. It is Thursday, May the 3rd, 2012, approximately 12 o'clock in Honolulu, 6 o'clock in New York City, and this is the daily report for gold and silver. Sharply lower pricing in the marketplace today. The markets closed for the afternoon session and will reopen shortly, but we, according to Kitco, down 1750 in the cash market. 1635.80, 1636.80 bid-ask spread with a low of 1630 and a high of 1654. Down about 8%, little over 1%, almost 2% lower on the day, 1.89%, 58 cents lower. 30.17 is the ask price in silver. They're showing a low of 29.85 and 30.75 as the high. There can be no doubt we are teetering on the brink or support level of this market in gold, and we have broken through a major support level in silver. We'll talk about both topics all here on today's daily report. Traders, the analysts out there are calling today's sharply lower prices in the precious metals, specifically gold, a risk-off day as we watch gold decline for the third day in a row. Now, the concern right now, of course, is slowing growth in Europe, and that's been strengthening the dollar and cutting demand for gold as a safe haven asset. On a technical basis, there can be no doubt we are at the bottom of this triangle. This is a weekly contract. This is June gold. The reason that I've been using the June gold rather than the cash is that there aren't misticks in the actual data itself that I can't clean out. I'm able to fix these two low points, meaning the beginning here, this low here, to create the angle or tact of this upward support line. Matches very nice here. And of course, we're teetering right now, without a doubt, right at the lower end of this support level. So traders, what does that actually mean, and what are we looking at right now? Well, this is a daily chart. This, of course, again, is June gold, and you can see the corrective triangle that is still valid, but only by a hair. The mark that we looked at, in other words, where this support line is currently, is approximately 1639. You can see we've closed at 1636, just a little bit below it, a couple of dollars below it. It certainly doesn't invalidate the pattern, but it certainly has raised concerns. And as you can see on the Heikin Ashi, because of the way it's drawn, it has gone into this area itself. Now, if we convert this back to a Japanese candlestick chart, you will see that the close, because these are our actual close, and this is where the market is trading at right now, 1636.40, that's the close in New York. You can see that we've gotten precariously close, and as a matter of fact, are right within this territory here. Now, if you recall from a couple of days ago, I am not concerned that the pattern itself will become invalidated if it just kind of touches into this area. It certainly has. There's no doubt about it. But we haven't gotten any kind of a hard break, and we're still within defined parameters. We're going to have to see. In terms of fundamental news, there's a lot of things in the woodwork, so to speak, that will be revealed over the next couple of days. Friday, tomorrow, we have a jobs report. Sunday, we have major elections going on all over in Europe. The one that everybody is watching, of course, is in France. It is believed that Sarkozy, the current president, will be deposed. They'll bring in a socialist president that has campaigned on removing many of the austerity measures that have been put in place. I think that that's going to be interesting, and it's certainly something that should move this market. The last chart that I do want to look at in terms of the gold market itself is this. This is our Heikin Ashi, and of particular interest to me right now is the fact that we have breached this 61% retracement level, which is 1638. We are a couple of dollars just shy of it, as you can see right in here. So we're absolutely at a critical point in gold in terms of the level itself. Silver. Well, silver, I'm certainly not as optimistic as I am on the gold market. We are looking at the July contract with this daily chart. It is in straight candlestick format. Break below 30, we have the market currently trading lower. And in terms of actual support levels, you can really see, these tops right in here. And you can absolutely see that this support level has been breached. Well, where do we think this market could go? And to answer that, I simply have to look at the next current Fibonacci retracement level. This, of course, is 61, 30, 54. Our next real area of strong support is below $30, and it's just at about 28.90, 2887.5. This is the 76% retracement level. And if we see continued downside pressure in silver, I would expect the silver market to probably test on an intraday basis this level, call it just around $29 per ounce. And when we convert this chart to our Heikin Ashi, you can see we have a very, very similar look and feel, and we have this absolute breach or market trading below what I consider to be critical support. We'll just have to see what this market wants to do, but there can be no doubt this market is under pressure right now. It has been gradually trading lower ever since that high of around 37.60. On a technical basis, we really don't see a lot of upside potential. The last chart I want to look at today is a chart of the dollar index. It's a continuous contract. You can see that it has moved back into an upswing. This is really a fairly strong move on a daily chart. You still have resistance hovering just at about 80 right in here, and then another band of resistance at about 80.75. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.